Now for the latest on President-elect Donald Trump's transition plans. Economic experts are warning Trump's promise to impose a 25% tariff on all imported goods from Mexico and Canada and additional tariffs for China will only lead to higher prices for shoppers in America. That's because the U.S.-based businesses who are buying those goods to sell here will have to pay more and will likely pass those higher costs on to consumers. So let's take a closer look at what kind of goods coming from these countries could become more expensive for you, starting with Canada. Crude oil is one of the top U.S. imports from our neighbors up north, which could lead to higher gas prices for us. They also export a lot of aluminum and lumber for construction. Moving south now to Mexico. Vehicles are the top good the U.S. imports from Mexico. And nearly every American automaker depends on parts from Mexico to build cars and trucks here. Not to mention the U.S. imports about a fifth of its agricultural products from Mexico and a lot of alcohol. And we know how often we see those made in China labels. The U.S. imports a lot of electronics, not to mention sneakers, clothes, toys, and furniture. Big retailers like Steve Madden are already planning to move operations out of China to get around the tariffs. But small business owners say they don't have that option.
There isn't really an easy solution beyond passing that cost onto consumers. Small businesses are very much uniquely challenged. I don't have the option of calling up Jamie Dimon at JP Morgan to do a bond offering to build a factory.
Mexico's President Claudia Sheinbaum is already hinting at the possibility of retaliatory tariffs. She announced today one tariff will be followed by another, which in the end will put businesses at risk.